Your competitors aren't stealing customers. Your systems are. Still waiting on that roadmap? Here's what's actually happening. You see declining engagement numbers, and you blame the market. Maybe Gen Z doesn't trust banks. Maybe fintechs have better marketing. But here's the truth. The problem isn't your competitors' advantages. It's your infrastructure's disadvantages. Every day, your core banking system takes 3 clicks where a fintech takes 1. You're training customers to leave. And they are leaving. Not dramatically. Not with complaint letters. They're just gone. 1 account at a time. 1 loan application at a time. When someone can get approved for a personal loan on their phone in 8 minutes, your 3-week process isn't deliberate and careful. It's just slow. The big 3 core providers, Fiserv, Jack Henry, and FAS, power roughly 70% of U.S. banks. These are solid, proven systems. But here's what we see across the institutions we work with. Most banks are running these platforms at maybe 30% of their actual capability. The gap between what your core system can do and what your customers actually experience, that gap has a name. It's called customer attrition, and it's costing you more than any consulting engagement ever will. Because the real cost isn't the technology. It's not even the implementation. The real cost is every customer who tried to do something simple, got frustrated, and quietly moved their primary banking relationship somewhere else. They don't tell you. They just stop logging in. By the time you see it in your retention metrics, it's 6 months too late. The average digital banking transformation takes 18 to 36 months from decision to deployment. That means if you started today, you're looking at 2027 before your customers see the difference. Your competitors, the ones who started in 2023, they're going live right now. Let me tell you about a regional bank we worked with 18 months ago. Call them Midwest Regional. Assets around $4 billion. Solid reputation. They were running on Fiserv and had been for 15 years. Good system. Stable. But their loan origination process was killing them, and they didn't even know it. Robert Sullivan was their chief operating officer. I remember the first time we met. He had these distinctive silver cufflinks, old bank insignia, the kind you inherit. He kept adjusting them during our conversation, this unconscious tell, whenever we touched on something that made him uncomfortable. I pulled up my tablet, showed him real-time analytics from their own public-facing systems. Their loan application abandonment rate was 61%. 61% of people who started a loan application on their platform never finished it. He thought it was a data error. It wasn't. I walked him through the user flow. 17 fields on the first page. 13 minutes, average time to complete section 1 of 4. No save in resume feature. If you close the browser, you start it over. Then the back-end process. Once an application did come through, it hit 4 different systems before a loan officer even saw it. Fiserv handled core account data. A separate system managed credit checks. Another handled document collection. Nothing talked to each other automatically. Loan officers were literally re-entering data between systems. 3 weeks average time from application to decision. But here's what really got Robert's attention. I showed him a heat map of applications starts by zip code. There were clusters. Lots of them. People in his own market were starting applications, hitting that first page, and vanishing. Then I showed him where those same zip codes were opening new loan accounts. 3 digital-first competitors. 2 credit unions with modern loan origination systems. 1 fintech that didn't even have branches. He was losing customers in his own backyard and attributing it to market conditions. The moment he decided to act, it wasn't the data. It was one question he asked himself out loud. How many of these people think we rejected them? That hit different. They hadn't rejected anyone. These people never even got to underwriting. But from the customer's perspective, they tried to do business with Midwest Regional and it didn't work. So they left. We designed the transformation in 3 phases. First, implement a modern loan origination system. They chose Abrigo, which integrates beautifully with Fiserv and dramatically accelerates lending workflows. Second, API connections between Fiserv and every customer-facing system. No more data re-entry. Third, rebuild the front-end application experience. Mobile first, save and resume, pre-fill everything we legally could. The whole engagement took 14 months. I'm not going to pretend that was easy. There were moments when Robert was adjusting those cufflinks every 30 seconds. Legacy system migrations are hard. Training is hard. Change management in a 70-year-old institution is really hard. But they committed. And the results? 3 weeks to 3 days for loan decisions. Application abandonment dropped from 61% to 18%. But here's the number that made Robert's board actually lean forward. Loan origination volume increased 42% in the first 6 months after go live. Same market, same rates, same credit standards. 42% growth because they stopped losing people in the process. We ran the analysis. The revenue impact of that volume increase paid for the entire transformation in year 1. Everything after that is pure margin expansion. Last month, I met Robert at a banking conference. Same cufflinks, but he wasn't adjusting them anymore. He told me something I think about a lot. He said, we thought we were competing on rates and reputation. Turns out we were competing on whether someone could finish a form. That's what this episode is really about. You think you're losing customers to better offers. You're not. You're losing them to better systems. The bank down the street isn't winning because they're smarter. They're winning because when someone clicks apply now, something actually happens. And the brutal truth? Your customers don't know it's a Fiserv problem or a Jack Henry problem or an integration problem. They just know your bank didn't work and someone else's did. Here's what you do this week. 1 action. Pull your loan application abandonment data. If you don't have it instrumented, that's your answer right there. But if you do have it, look at abandonment by page and by field. Where are people stopping? That's not a user experience problem. That's a revenue problem dressed up as a form. Bring that data to your next leadership meeting and ask 1 question. What's this costing us in actual loan volume? Not theoretical. Actual. Then call us. Because the systems you have right now can do more than you think, but only if you know what questions to ask. The cost of waiting is higher than you think. The next video proves it.